Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts on the show today. Kalra of Target Investing, Foram Parekh of Indiabulls Ventures, and Senthil Manikandan of Newberry Capital. Thank you to all of my guests for joining me. Today on the show, we ask our experts about the fall in M&M prices. The stock is down almost 15% this year. We analyze what's caused the fall in M&M this time. Jet Airways has seen a sharp correction from the highs, but of the last 2 days, yesterday it recovered almost 18% from the lows. Today it's up almost 10%. With the recent crisis and no business at all, we ask whether if the current price is worth taking a bet on Jet Airways, on the anticipation whether someone will probably take it over. The graphite electrode story, is that over? Because both HEG and graphite are down almost 60% from their record highs. Again, a lot of problems happening there. Is this story over, or is it a good time to start entering into the counter? And mid-sized private sector bank DCB was at a 52-week high post the numbers in the fourth quarter. The numbers obviously came out last week, but it did manage to hit a high of 215 today. It's cooler from that level, but among the smaller private sector banks, would you take a bet in DCB? So that's something that we will discuss on Hot Money today. Let's start with the first stock, Mahindra & Mahindra. Very poor set of poor performance by the stock. Again, it's down in trade. It's down almost 15% on a YTD basis. Probably one of the worst performing Nifty stocks from the start of the year. What's causing the problems? It's down in the last 9 months. It's down almost 27%. So there is pain there. Are the tractor numbers or the auto sales numbers not reflecting it? And what's the outlook? We ask our guest first. So Senthil, M&M, what seems to be the problem? Because we know that the auto sector is under problem, but this type of fall in M&M, is it a double whammy because of slowdown in auto and tractors is not doing well, or are you sensing something else?
Yes, like exactly pointed out, the two core businesses, like one is farm equipment and the second one is the auto business. Both are undergoing kind of stress levels. If you look at the tractors, the industry had a very good period over the last 3 years. The industry volume grew by around 17% over the last 3 years. And now I think over the next 1 year, the industry will slow down a bit and then it will catch up over the year. And also next 1 year, you have to wait and watch how the monsoon plays out. I think now the estimates are showing a normal monsoon. So monsoon plays a very prominent factor in the tractor volumes. So tractors, we are expecting a growth of around 7 to 8%. And within the tractor space, we have seen in the last 2 years, M&M has lost its market share, especially because towards the Escorts with these new launches and things like that, they have lost around a 2.5% market share. So that also may be playing the stock. On the auto business side, we have seen consistently in the last 5 years, M&M has lost its market share in the UV space because M&M is a core player in the UV space starting in 2015, but with the new launches from Maruti, Brisa and such like things, I think they have lost market share, especially when the market shifted towards the compact UV segment. And their launches in the compact UV also hasn't fructified that much. So I think these are the reasons I think the stocks have corrected nearly 27% as you mentioned. But if you value the core business, it's trading at around 12 times FY19 earnings. So that looks attractive from the valuation point of view. But going forward with you're expecting a 6 to 7% kind of earnings growth, I think the market is correctly valuing the company. And M&M we have to also factor in their investments in all the group companies. So we have to give you a substantial holding company discount to that investments across some 7-8 listed player companies also. So our valuation estimates is like if we value the investments in group companies at a 35 to 40% discount, it will be around 200 rupees per share. So if you exclude this 200 rupees, you can say the stock, the core business is valued at around 440, 450 levels. So on that basis, we have to wait and watch how the new launches in their UV space picks up. So that will be the major trigger. And recently they have formed their joint agreement with Ford to launch a UV. So we have to wait and watch how this segment also plays out.
But at this time, you said valuations are attractive. But if someone is looking to take a position, should he wait for a decent more correction to come in, or is it the right time to enter M&M?
I think one can start accumulating in a staggered way because M&M as a stock, it has a strong management has a strong track record. So, and they have a prominent position in the tractor market share also. So, I think one can start accumulating at this stage and then wait for some major triggers to increasing the accumulation phase, I could say.
Okay, Forum, you all have active coverage on M&M. Do you all have it, and what's the sense that you all have told your, your clients what to do with M&M? What explains the fall, and what should one do?
So we do not have an active coverage on M&M. We have an active coverage on Escorts. And if we compare, from both the companies, because both are into tractor business, into rural farm side, so both stands a direct comparison. And if we look at the monthly sales data, for like past 5-6 months, M&M, both domestic as well as exports have not been able to pick up, as Escort is able to pick up. So we feel that Escort is a better, call than M&M. And if we see, the entire auto space has been a laggard. They had their own set of problems, the liquidity crisis, the fuel and the insurance problems and everything. So I think the crude problem is currently also going on, so that's going to be like an ongoing thing. But purely on the basis of the numbers, the volume pickup and the earnings also, I think Escort any day stands a better pick over M&M. Of course, valuations are very attractive for M&M, but the fact that it is not supporting in the earnings growth, even in the monthly sales data, so we would still want to wait and watch, how does the new launches picks up. Monsoon is also said to be normal, but then again crude factor is there, and it's going to be there because we have seen fresh problems for crude, and of course Saudi Arabia would be supplying, which would compensate for the Iran stoppage. But then still we need to see how does the crude factor pans out, and if it is still rising, it would impact the entire auto sales companies. And in this kind of scenario, in the past also we have seen where crude had gone to like $85 per barrel. Despite those kind of scenario, Escort did prove itself, by reporting good set of numbers. So then I feel that Escort also, which is corrected significantly from its highs, should be bought over M&M for good returns.
Okay, so buy M&M, Escorts over M&M is something that Forum is speaking about. Samir, what's your sense? Why this, such a big sell-off in M&M as compared to Escorts also?
Yeah. So if you see M&M, they're losing out market share in the PV segment. If you see on the tractor segment, what is happening, they had a good sales in Jan-Feb, which was a pre-monsoon kind of a built up at the inventory level on the dealers. So that has now incrementally created an issue for them, because the financing has become very difficult. Even if they're the group company M&M Finance, that's the major leading financial company, which is facing a source of funds issues. So this gets interconnected to the tractor sales which they are pushing through. And over there I feel the built-up is much more higher than the passenger cars or two-wheelers out here. And this will go down even further. I don't see any reversal coming anytime sooner in the tractor sales. So and plus the monsoon predictions are both almost near normal. They're not above normal or very clear picture is there. So I think as we enter into that monsoon season, that might disappoint again, and you might see a downfall in the tractor sales as well. And so I see a further downfall in the company.
Which is a better bet, M&M or Escorts now?
So I think for me both are a stay away as of now.
Okay.
For me, avoid automobile sector as a whole as of now, except Bajaj Auto and the Tata Motors for me.
Okay, so that's the view that's coming in on M&M. Probably the pain on the sector side, on the tractor side, probably will continue. Samir says avoid both. But Senthil is saying accumulate on dips, and Forum is indicating that Escorts probably is a better choice to buy than M&M in this drop that has happened. The other stock we want to talk about is Jet Airways. Now it's very interesting. No assets, no business. The counter is up 10%. Yesterday the stock was down 18% at one point of time. Managed to close in the green. Today it's up 10%. Surprisingly, would you bet on Jet Airways? So will it revive? You've seen stocks like Z and Yes Bank drop on issues and then recover. But on the other hand of the spectrum, you also have a Kingfisher, which was in a similar situation and actually got delisted out of the exchanges. So it's a brave bet. Whether one should take this or no is something that we'll ask our guest. Foram, Jet Airways, everyone knows what the current status is of Jet Airways. Probably it can revive it one day. But if someone wants to take a bet, should they be brave enough to take a bet? Do you see any kind of scope for the revival of this airline?
Well, I would recommend to stay away from this counter because, there is no clarity at all whether lenders are going to lend money or not. And even after lending, would it become profitable business or not? And of course, it would take time to become profitable because we always have a crude overhang problem. Had it crude been lesser than, $60 per barrel, which would have been very attractive for airline companies. But then I think at this range also, and with fresh problems occurring in crude, I think one should stay away from the aviation sector as a whole. And with regards to Jet, I feel it would be like a dead cat bounce back effect, because one would just want, I think the stock is out of F&O ban, and that is why one would just want to take a trading position. But I think from an investment scenario, as you rightly mentioned, there is no operations and there are no assets, and we're just seeing its slots also being given to other players, the talks of slots being given to other players also. No flights running, so we would not want to go in such a business or in such a counter where there is no certainty at all. If crude has to decline and one has to play a bet on aviation counter, SpiceJet is any day a better pick because we are seeing they are adding new flights and they're getting new routes, and they've just signed with Etihad also. So everything looks good for SpiceJet over Jet Airways.
Okay, what about you, Samir? Would you take a brave bet on Jet?
So we have taken a bet.
Okay.
We have taken it on Thursday and yesterday as well. We have increased the weights what we had, and it's in the binary phase what we call. So either the survival is there or not there, right? Now the chances of survival, if it wasn't there, I think banks would have closed the tap earlier itself. And it was a good decision to ground the operations because till the time you don't find a buyer, and a buyer will not be interested till the time every day you're giving a 30 or 40 crores of loss, and till May 10th it would have been a 500-600 crore additional burden which would have been created because of the bid process. I think secondly, even if the bid process does fail and Etihad backs out of it, the situation again goes that somewhere that 7,800 crores which is piling on the domestic lenders will become a priority, and they might take it to a DRT or a IBC situation. So over there, what happens, you are not able to create any liability for the buyer. So the buyer will be more interested, and you might see a renewed interest by other players who have not shown a EOI. Because I think that situation is building up. That can be played.
No, but what are you betting on? Because Jet doesn't have planes. Those are leases that has gone.
See,
the slots are gone. Why will someone?
Slots are not gone. So that's what I'm saying. So the information what you're getting is they have 440 slots. 25 slots have been allocated earlier. Right now only 35 slots have been allocated additionally. So there are still 300-350 slots empty. And there are 70 aircrafts grounded which haven't been repossessed by the lessors.
Okay.
And they're not moving ahead because it has a technical system where wet lease is involved. A dry lease is easy. So the dry lease has shifted to a SpiceJet, or now the Boeing can go to Air India if lenders want. So I think the lenders have a very big interest out here, and they're trying everything to make it more valuable for the new bidder. Whether it comes at this stage or a NCLT or a IBC stage, I would be still interested. At least the price which I got on a Thursday or a yesterday.
Okay, what about you, Senthil? What's your sense on Jet Airways?
So definitely it's an avoid at any stage because if you look at the aviation industry in the last 30 years in India, around 30 airlines have gone out of the business, and none of the airlines was able to come back start the operations once they have grounded their planes. So such is the dire status of the competition is very quite heavy. And Jet Airways, we have seen that if the bankers are quite 100% sure of the business, I think they could have lent the emergency funding and keep the operations going on. Because each and every day passes, I think the competition is more aggressive in getting the slots. And even the government is, I think they are on the consumer side because they don't want to have the ticket prices going up. So they are allotting the slots to the competition. Plus on the plane sides also, competition is leasing out what are the grounded planes. So I think any newcomer who comes and takes over the airplane has to, even if the lenders take a 50% haircut, then there will be 6,000 crores of debt. Plus there is a past dues on lessors is there. So it takes around 2 to 3 years to build come to the stage of around 120, 130 planes. So it's a long drawn process. So and the buyer has to have a heavy cash balance with it. So it's a very tough condition it's right now. But so it's avoid for now.
Okay, so that's the view that's coming in on Jet Airways, while two of our guests do believe that it's an avoid. Samir is indicating that one should accumulate debt. He himself has made a disclosure that their fund or he on the basis of his clients has accumulated Jet Airways. The next again is a sector which is very interesting. Probably it was the sector of last year where counters like HEG and graphite managed to move up significantly. Now they have corrected almost 60% from the recent highs. Yesterday, if you look at it, Graphtech, which is one of the largest graphite electrode player, was down 10% in the US markets, given the fact that the China capacity in making graphite electrodes is increasing. So is that a concern? Is the graphite story over in India? That's something we want to ask our guest. Samir, I'll start with you. Is the story over, or at 60% lower, you believe that there could be a revival?
So I think the story was over a quarter before.
Yeah.
Because what has happened is during the 4 quarters where the results were being really good YOY, quarter on quarter, the story was mainly the prices had gone up. They were receiving a lot of cash. And within that time, they were not able to increase their capacities. So what was happening, the capacity utilization got stabilized and your results quarter on quarter got stabilized as well. So now the global prices are being stabilized or have a negative outlook. So, and you haven't done any capacity addition which should help the volume growth here on. So any day your results will show a static move or even a further downside. So I think that story has been played out, and initially also I wasn't interested in that kind of a rally, and now also even after this kind of fall I'll be not interested.
Okay, you believe that there could be more pain for them. What's the sense? Do you agree on this story that we were, or what's your sense?
Well, I feel it's a long-term story and it should be, accumulated at current market price. Of course, short-term overhangs like China supply and all is there. But I think China has just started with it because they had earlier closed because of the pollution effect and all. And if you see, demand-supply mismatch would be there because by the time China starts supplying in full-fledged, demand for steel is already going, ongoing over there. So 6 to 9 months of demand supply mismatch is there, is what I feel. And again, if you see, there are very few players in the worldwide, supplying for electro steel, and the demand for worldwide is quite a lot. I think for the steel production itself, India has surpassed Japan, and the demand internally is also very strong for the steel. So I feel that of course stabilization is there. HP electrode prices have stabilized, raw material prices have stabilized, because last year they did do those panic buying which rose the prices significantly, which led to the realization spike. But of course we would see quarter on quarter flattish kind of result because of realizations being flattish. But then I feel long term, for the long term horizon, one should definitely buy this at current market price, and it augurs a good buy at current market price.
Okay, that's the view. Senthil, I know you don't track this actively, but you want to add any comments on this, or would you let it go?
No, let it go.
Okay, so that's the view that's coming in on graphite electrodes. Again, you have two sides and two views that are coming in on graphite electrodes. While Samir is negative, he believes that the story is over. Forum is indicating that it's a long-term story. Probably a short-term overhang will be there, but it should be accumulated. And the last topic we want to talk about is DCB Bank. Came out with numbers last week. Yesterday, in fact today also, it hit a fresh record high. at 215. It's managed to cool off from the highs of the day, but the numbers were not bad for DCB Bank. What's the sense on DCB going ahead? It's up 30% in the last 9 months, and the last 3 months it's given returns of 15%. So as the smaller private sector banks, it has given decent returns. Senthil, DCB Bank, what did you make of the numbers, and is it worth accumulating or having this bank in your portfolio?
Yes, sir, because we look at the Q4 numbers, even on the FY19 basis, I think management has delivered on its whatever they mentioned in the start of the year. Like they want to bring down the cost to income ratio to 55%, and they've achieved the target in the Q4 itself. So numbers wise, the PAT was up by 50% majorly because of the operating leverage plus on the higher other income. But on the core, NII grew by 14%, which was backed by advances growth of around 16%. But if you break up the advances growth, retail has grown by around 20%, while the corporates have declined by 11%. But their focus is much on the retail side. So if you look at the last 3-4 years, the management has gone for a higher expansion, like they want to double their branches count, but they have done that, and now going forward they are looking at a branch count of around 15 to 20. So higher operating leverage will come into play over the next 2 to 3 years. Plus a loan growth of around 18 to 20% is feasible because they are present mostly in the self-employed segment. We have seen now the stress in the NBFC has caused the competition to go slower. So it is very much advantage for DCB like small banks. So on the competition side with lesser competition, and they're also increasing the granularity of their deposit books also. So these are the positives which I see. And the valuation price, even though in the last 9 months they used to trade around 1.4, 1.5 times price to book, but now they are trading at around 2 times. So but I don't see any re-rating possible, but it can grow at around 14-15% kind of. So those who are holding it, then continue to hold the bank.
Okay, Foram, what's your sense on the numbers and what's the outlook for DCB Bank?
Yeah, so we have a very positive outlook on DCB Bank.
You all have coverage?
No, we do not have active coverage on DCB Bank, but we have on other regional banks like Federal Bank, City Union Bank, RBL Bank. So what happened is, Q4 numbers have come extremely well on all counts. The NII growth has been good, 15-20%. I think NIM has come at good 3.5% if I'm not wrong, and PCR ratio is above excellence. I think it's worth 78%. Provisions are in line. Asset quality is stable. Return on asset is like above 1%. So on every count, I think there is an uptick. Result has come, I think, much better than what the management had guided for, and that is why we feel when the entire bank Nifty part, rallied a lot. Other private sector banks, have rallied quite a lot in the past, 2 to 3 months. Regional banks did not, contribute so much to the rally, and that is why I feel even DCB Bank did not rally significantly. So I feel that DCB Bank and other regional banks would now participate in the rally and will continue to trade near to its 52-week high.
Okay, that's the view that's coming in. So again, a portfolio buy. And Samir, what's your sense on DCB Bank?
So I have a neutral on DCB because if you see past couple of years, they have done a massive expansion on the branch levels, and generally on the branch level it takes 1.5 years to break even and create that kind of a profitability. So that's why even if you see the certain numbers, it becomes a suppressed number as of now. So I think it'll take another 6 to 9 months to actually show that branch expansion into the numbers very in a bigger way, and that will really push the numbers ahead. So I would like to watch for another couple of quarters before taking a call on.
Okay, so that's the view that's coming in. A little cautious view coming in from Samir, but the other two guests do believe that, positive view coming in on DCB Bank. But with that, it's a wrap on today's edition of Hot Money. Many thanks to all of my guests for joining me. Senthil, thank you so much. Foram, Samir, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Queen.